Now, as tax advisors and financial people, as well as for those who are working in industry, you might be reading news every day around that there are these demerger which are happening. Have you ever wondered what is the reason why these demerger are done? And what is the tax aspect or the tax reason behind doing these demergers? Now, of course, in any report that might be there for demerger, there are hundreds of reasons which are given, but no one mentions that a large part of these demerger are actually done for tax reason, and there are no other reasons in many of the cases. I'm not saying all of the cases, but in many of the cases, there are no other reason for demerger but to have tax arbitrage. Now, how does that work? So let's talk about a situation where there are two group companies, G1 and G2, and let's say there's a common shareholder who owns 100% of these two entities. Now, what happens is, insofar as G1 is concerned, it has two businesses. One, an eligible business, as in, if you do a demerger, the losses of this business can be set off against the profits of the company where the demerger is happening. And another is a non-eligible business where you don't want to do the demerger for any commercial reason or any reason otherwise. So let's talk about this, that the profits or the losses of the eligible business are 200 and the losses of non-eligible business are 100. Whereas we have a group company here where the taxable profits are 250. So assuming a tax rate of 25% of 250, which is 62.5, is the amount of tax which this group company might be paying. Whereas these losses, because they are being incurred again and again, they are carried forward, and there's no such specific reason or specific advantage that the company has out of this. So there comes someone who gives a valid advice to a company saying that let's enter into a scheme of arrangement and I will just demerge this business, the eligible business, from this legal entity to this legal entity. Of course, there are conditions as to when the losses carry forward is allowed under the Income Tax Act. There are conditions as to when the Companies Act will recognize this demerger, but that's a detailed topic which is not a part of this video. Now what happens is that suddenly this 250 profit which this group company had will also add on, because after demerger, the legal entity for this business will be the new group company, will be set off against these taxable profit, because in India, the tax filing is done as an entity as a whole, and the taxable profits are reduced to 50. Assuming a tax rate of 25, the total tax here will be 12.5. So there's an effective saving of 62.5 minus 12.5 or 50, which is done by this group just through a simple exercise of demerger. There are many other conditions which are there, like I mentioned. For all of them, if you want to have any discussion, you can please comment in the box below or feel free to reach out to us and we'll be happy to help you.